Welcome to another video on Stocks to Buy and Hold Forever 2022 edition. We have done a lot of research on many companies, and this is a list of 9 stocks I believe that are strong and solid enough to buy and hold forever. Hello everyone, welcome back to the channel. If you're new here, welcome. Please consider subscribing and smashing that like button. As a matter of fact, today is my birthday and would mean the world to me if you do so, and would really appreciate it. Now, I know there are thousands and thousands of companies out there to buy and hold forever, and would love to know your favorite ones down in the description below. But this is a list of 9 stocks that I believe are a good buy and hold forever 2022 edition, even though I only currently invest in 4 of them, and I have been tracking the others for so long and have to say that I like their business model and company. The first stock in this list is one that I don't normally talk about, and this is Waste Management. Waste Management is a company that I used to invest in 2019, 2020, then I sold the stock. But I have to say that this is a nice anti-crisis and anti-recession stock, as this company do waste management, as the name says it, and even if we get into a crisis or a recession, they will continue doing what they do today, as people need to throw out trash, for example. We can see that the stock is currently up 17.85% in the past month, and we can see that it dropped 14.60% in the drops in between December and February. We also see that the stock had a very nice 2021, even though many companies were not able to. Waste Management is currently trading at $159.16 per share with a market cap of $66.07 billion, a 52 weeks low of $133 and a 52 weeks high of $168 per share with a PE ratio of 37.10 and a dividend yield of 1.63%. We can see here the nice growth that they have been having, even though this is not a growth company. The growth is not as huge. This is more of a dividend company and kind of a company that will help you balance your portfolio in any kind of crisis, in my opinion. So I would not expect a huge growth from this company, but I would expect a nice dividend and a nice continuous growth, to say it that way. Analysts are expecting a growth of 6.30% for this year and 5.20% for next year. The next stock in this list is Shopify. This is a company that is very well run. Recently, the stock has gone down a lot, and it is getting very interesting at current prices. I have used their platform before as I used to do e-commerce, but we know e-commerce is not having that much growth right now, but they definitely benefited during the pandemic. So now it is getting to better prices or normal levels as a stock, and in my opinion, it has a lot of potential as a company. We can see that in the past year, the stock is down 52%, but since November until today, the stock is down 65.53%, as we know that it has been crashing lately. Still, it had a nice run up after the pandemic crash in March 2020 between April and November 2021. It is currently trading at $579 per share with a market cap of $72.51 billion, and I have to say that it has gotten to a very nice price with a PE ratio of 25.30 and a 52 weeks low of 510, a 52 weeks high of $1,762 per share. As you can see, the huge volatility this stock has been having between $501 and $1,700, which is why I believe it is getting to nice prices. Still, we can see here how the PE ratio has been going down recently, as the stock has been crashing as well. Analysts are expecting this company to report a growth of 30.90% for this year and 32.70% for next year. I have to say that this is a company that I have never invested in, as I believe it got really overvalued, but I have used their platform. I really like their platform and the potential that they have as a company, even though e-commerce is kind of getting affected at this moment. But this might be presenting a nice opportunity for anyone that wants to invest in this company, as I believe that is getting to very nice prices. The next stock in this list is one of the favorites of this channel, and this is Facebook, or Meta platform. The valuation has come down massively in the past month, yet the company has continued growing and now expanding even more into the metaverse. And we can see it is currently down 31.35% in the past year, and it is down 44.50% since its peak on September 10th, 2021. It's currently trading at $209.92 per share with a market cap of $570 billion. Obviously, we loved it below $200, but I believe it's still at a nice price, as we can see that it has a PE PE ratio of 15.26, and we can see that it is really, really low since 2018, which is presenting a very nice opportunity. Now, I do understand that this company now brings an extra risk, which is that they are mainly investing almost all of their money and their time in the metaverse as they changed their name from Facebook to Meta platform. And if you invest in this company, you need to understand that that is a risk that now brings, because if the metaverse does not turn out well in the coming years, Facebook or Meta platforms might not be doing that well. But in my opinion, they have a lot of potential. And even with their current business, even though they're getting attacked by Apple and Google, I believe that they have a lot of potential as well. And I believe that these prices are a complete steal for this company. So the analysts are expecting a growth of 11.80% for this year and 17.10% for next year. The next stock in this list is INTUIT. It is a very interesting business and well diversified within their industry. They are the owners of TurboTax, which I'm sure many of you have used to do their taxes, QuickBooks, a very popular accounting software, Mint, the app that I have mentioned many times in this channel that helps you track your finances and organize your investments, expenses, income, personal finance, and everything. Then they have also Credit Karma, another app that helps you understand better your credit score, what is affecting your score, which credit cards are good for you, and more. And lastly, they acquire MailChimp. I have to say that I have used Mint, Credit Karma, and TurboTax, and I love them. This is a company with our current income and huge potential, as I believe even if we see a crisis, people will continue paying for their services to run their businesses or personal finance if nothing else happens to those businesses or that people. We can see that the stock is up 11.85% in the past year, but it is down 32% since its peak on November 24th, 2021. It is currently trading at $465 per share with a market cap of $131.53 billion. I do have to say that in my opinion it is still a little bit high with a P/E ratio of 59.82, but we can see the huge volatility and the 52 weeks range between $385 to $716 per share. Still, I believe that this stock needs to go a little bit down, but I do believe that this is a company that I would like to invest in and hold forever because of the service that they provide at this moment. Analysts are expecting a growth of 27.80% for this year or 15.30% for next year. The next stock in this list is Adobe. It is almost the same situation with INTUIT, as I wanted to go down a little bit more before investing in it, but it is another company with recurring income and an excellent product used by many freelancers, myself included, which means that no matter what, if we are in a crisis or recession, people will most likely need to continue working, which means that they will continue paying for their services. Obviously, the company will get affected if that happens, if we get into a recession, but I don't see this company disappearing anytime soon, which is why I believe it is a good company to buy and invest forever. It is currently trading at $420 per share with a market cap of $198 billion and a PE ratio of 41.76, but we also see the huge volatility in the 52 weeks range between $407 and $700 per share. Still, we can see that PE ratio have been going down in the past months as the stock have been dropping lately as well. And I have to say that it is calling more my attention than INTUIT at current prices, but I would like to see both going down a little bit more. Still, analysts are expecting for Adobe to report a growth of 13.10% for this year and 14.70% for next year. And we can see that the stock is currently down 19.93% in the past year, or almost 40% since its peak in November 19, 2021. The next stock in this list is more of a group of stocks, which is PayPal and Square, most popular fintech companies in this moment with nice growth engines, nice valuation, and at this moment. PayPal has a nice growth, which I don't see slowing down anytime soon. And I currently don't invest in PayPal because I invest in Square, but I have to say that it has been catching my attention lately because of the current valuation of the stock, as the stock has been crashing. We can see the stock is still up 133% in the past 5 years, but it is down 66.84% since July 2021. It is currently trading at $102 per share with a market cap of $119 billion with a PE ratio of 29.07. We can see here that the PE ratio have been going down lately as the stock has been crashing as well, but analysts are expecting a growth of 15.70% for this year and 19.70% 70% for next year. Still, we can see here the nice growth that this company has been having year over year since 2012 until 2021, which has been having a constant growth and diversification and potential as a company. Now, Square, they have the most popular app, which is Cash App, and an excellent growth. The stock is down massively as well, and I believe it has a lot of potential at the moment. I have been increasing my position lately as the stock has been crashing. You can see that even though it is up 593% in the past 5 years, it is down 55.90% in the past since August 2021. It is currently trading at $120.90 per share with a market cap of $70.36 billion. And we can see that huge volatility as well, as we know that this stock got really overvalued. Obviously, we all love this stock below $100, but I believe that it is at a nice price right now, and I would like it to drop a little bit more in order to add more. But still, we can see that the PE ratio have been dropping as well in the past month, while the stock have been dropping. And the nice growth that they have been having as well since 2012, even though they saw a huge growth in the past year because of the pandemic, as they benefited because of that. But analysts are expecting a growth of only 6.50% for this year, which I believe it can be a little bit higher. And for next year, they're expecting a growth of 21.40%. The next stock is Amazon. This is one of those companies that has excellent growth and nice potential. It is very well diversified and with nice financials and very well run as a company. I do have to say that Amazon is in one of those periods that the stock consolidates itself for a period of time before either exploding or going down. Just like it happened between 2018 and 2020. This is a period to accumulate, as I have been doing. I have been increasing my position every time it drops below $3,000. But still, I believe at $3,000 it is at a good price in my opinion. We can see the nice growth that this company has been having as well year over year since 2012. And I believe they still have a lot of potential in the long term, which is why I've been investing in this company since 2019 or even 2018. The last stock in this list is a little bit different, as I don't invest in this industry, but this is JP Morgan. It is a nice dividend stock and a bank which I know many of you have been interested in to invest in bank stocks as interests are going up. And even though I loved Wells Fargo, I have to say that JP Morgan is the biggest and best bank in the US at this moment with a nice dividend. We can see that the stock is down 26.58% since its peak in October 2022. It's currently trading $126 per share with a market cap of $370 billion and a PE ratio of 8.21, and also have a nice dividend yield of 3.17%, which if you invest in this stock, it is mainly because of the dividend and not that much because of the stock growth. The last stock in this list is one of my favorites, and this is Disney, one of my favorite companies that got really affected during the pandemic but have been recovering and have a nice diversified business that gives me exposure to cruise lines, resorts, streaming, theme parks, and more. We can see that the stock is down 33.83% since its peak in March 2021. As we know, the company have been getting affected, but it's currently trading at $130 per share with a market cap of $237 billion. And we can see the volatility that it has been having as well. Still, analysts are expecting a growth of 31.50% for this year and 11.60% for next year. I've been investing in this company since 2019, just before the Disney Plus app came out, and I believe that the company still has a lot of potential, and as it has been recovering a lot since the pandemic. Now, obviously, there are more stocks good to buy and hold forever that I might have not covered in this video, but I will leave you here a video on investing strategies I have learned throughout my investing journey, and here for you to subscribe. Thank you, and see you next time.